Welcome, everyone, to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about a number of things that we saw today from the standpoint of this huge rally that nobody's talking about, by the way. So we'll get into the details. Let's go. Okay, folks, welcome back again today. We had good views, I think at 1,000 likes, so appreciate that. That's great. You're rewarding me for showing up, so that's always good. A couple things. I went through a bunch of the market websites from CNBC to whatever, Yahoo Finance. Not one story about this, what we saw today, and when we were together last night at this time, the markets were down, pushing 4.5%, was bouncing about 1% randomly. And that was just the beginning. And what we saw was basically a 6% rally. We're up right now, I'm looking at 0.80 in tonight's session. So we're looking at a 7% rally off the bottom. And no one's talking about it. I couldn't find one story how the market rebounded. All I saw was the stories that Trump doubles down on the tariffs and all that stuff. I see 11 pounds for the Ray Dalio. Those of you who follow me on Twitter, and I want to go there. I'm going to talk about my Ray Dalio comments. And this is an interesting time to be alive. We've known that for years, since really a long time, but the pandemic really made it kind of really obvious, I guess is the best way to put it. And we're just seeing all of these elitists and we're seeing everything crumble in front of us. And this was my point on my Twitter response was, to Ray Dalio put out one of his classic, this is the 100-year debt cycle, everything's coming in the end, there's going to be wars and all this. This is the problem, and I talk to you folks about this all the time. The problem with investing and looking in the rearview mirror is you very seldom ever get it right. The old saying that history always repeats itself, no, it doesn't. It sometimes rhymes, but it doesn't repeat itself. And to look back into the dark ages and look at where humans were back all those times ago, we're not there, okay? Hopefully we're a little bit smarter. Technology has changed things a lot. And this whole view of how things always work, this is how it ends up. And I don't have this catastrophic view of what's going on. In fact, I've always been an optimist to a large degree. And I remember in 1989, we called it the mini crash. It didn't come up when I was doing my Chat GPT search for crises that I did yesterday that I posted in the Substack. I also put it in our Discord. But it's funny because no one's really talking about what's really going on. And what's really going on is it's not tariffs. I keep telling you folks, it's about the restructuring of trade and this big sea change that's going on. So Dalio's telling you this debt, catastrophic ending. So why did they do that? And somebody made, I think, this comment here that he's like the Harry Dent of the world. All of these guys, listen, you can sell doom a lot better than anything else. If I put on the thumbnail for this video, we've monitored this. I think I've put out almost 1,200 videos in the last 5 years. If we look at, and if we put a negative like markets going to crash, we'll get twice the views that if we go market's going to rally, everything looks great, okay? Just as a contrast. And where we stand right now is you've got a lot of folks that are always promoting this end of the world scenario. And, let's face it, I'll call Ray Dalio's a WEF promoter, and these guys are all dying. Okay, they're done. And the problem that everybody has with the Trump tariffs and the Trump reset is that they are actually trying. I made this comment yesterday. Is what's happening is the people that are being affected the most, the Black Rocks and all these folks. When you see the markets come apart like this, they're the ones that are crying the loudest, right? I think it was Musk that said, if you want to find, he found when they were at PayPal, as soon as you attacked the fraudsters, they were screaming the loudest that everything was okay. They're always fighting against the stream. So what I'm seeing here, and I think that there's still what I've been talking about. I think we still have a lot of work to do. Obviously, it's been a week, a little bit. We working on a week, 8 days since the tariffs were announced. We all knew they were coming. In fact, not only did we know they're coming, we knew they were coming last August. We knew in November what was coming. Trump's never changed his mind. He's not going to back down. And most likely what we're going to see is more deals coming through and things of that sort. So check out, if you don't follow me on Twitter, go to Portfolio Expert. There's no E in expert, just the X. And then you'll be able to read my response to Ray Dalio. But in the end, markets and the people in the world don't want to be at war. We don't want to kill each other. We just want to make money and have freedom and live our lives the way we want. That's all pretty much everybody wants. I'm just looking. So here's what we don't know, and I keep arguing this, is we don't know what the events of these tariffs are going to be. They've been in place for a week. We don't know what's going to be reduced. Are we going to get zero trade? No. But we are going to see a reshuffling of the deck, and this is a good thing. And if somebody made a point I saw somewhere that somehow all the other countries charging tariffs to U.S. consumers is okay, right? Air quotes, but us charging them is not. And so this is a typical thing. One other thing I want to point out, and what we've been seeing with the volatility, I'm still looking at liquidity as non-existence. I saw somebody on the Discord, one of the users on Discord, saying he got kind of wiped out. I don't know, did I say it 10 or 20 times? Don't try to trade this thing. This is a pro market environment right now. You try to come in there, you're just going to get wiped out. There's too much volatility. You have to trade right now. You have to trade about maybe 20% of the normal size that you're trading, because if you put too much on, the volatility. I mean, I watched today, intraday, in that last hour, I watched in, I think it was 8 minutes, going from 0.2 positive to a 1% drop in 8 minutes. Now, normally an 1% drop would take us a whole day to work down, and maybe we open 0.5% lower and they grind it down for the whole day. We're talking 8 minutes from plus 0.2 to minus 1%. So be very, very, very careful in this stuff. And yeah, I'm just looking here. I haven't done any Peter Schiff jokes for a while. Yeah, I hope you guys watch. I've been leaving that link to the All In podcast with Bessett and Howard Lutnick. Watch those. They're telling you what they're doing. It's total transparency. There's never been anything like this. You can hate Trump, you can do whatever, but they're like in your face telling you this is what we're going to do. So let's talk about the activity, and then we'll get into the charts. We won't run over like an hour and a half like I did last night. But what I want to break down is what is likely to happen. I still have basically the same context that I had the last 3 videos I've done, and if you don't get the Substack newsletter, actually a lot of you, thank you for signing up. If you're watching today, I got quite a few new subscribers to Substack overnight. That's awesome. Appreciate it. You get a 7-day trial, and I think it's $8 a month, and then if you get an annual, it's $80. It's $6.50 for that. And it, like I said, it usually comes out about 5 a.m. I had a crazy project last night, so I didn't get to bed, I think, until almost 8 a.m. New York time this morning. So it was one of those. James is right. 293 likes, people watching, and like 50 likes. Just hit the like button while you're here. I appreciate everybody showing up. I think we got up to about 700 views real time last night. So, but let's try to break down. I think what the economy is doing, and the reason why I brought up, I think I might still have them on screen here. Let me just see, because I want to reference this again, because I think it's relevant to where we are right now. Yes, let me bring this up here. So this is all the previous declines that we've seen, and one of the things I pointed out last night is that the 1987 crash, one day 22.6%, and from August 25th to October 9th, I think it was, or 19th, we had a 32.6% decline. So but here's the thing that didn't happen. It didn't signal a recession. There was no recession. I talked to you about last night when I had to speak in front of the international conference in Mexico City, and I told everybody it wasn't 1929, and we weren't going into a recession, and that's obviously what happened. Is we didn't have a recession. What we saw was a complete recovery. By March of the following year of '88, we were at all-time new highs again. So I'm not predicting that we're just going to all-time new highs, but I'm also telling you that most of the declines, it seemed almost ridiculous 2 weeks ago, especially in Substack. I was talking about getting to 51.12 to 48.36. Well, we went 48.32 last night, and we bounced off of that thing vertically. And yeah, and this is Andy, thanks for a couple of pounds there. Taiwan said 0 tariffs and pledged investment in U.S. Yeah, I mean, Taiwan, I'm in Arizona. I'm about 20 minutes. I can drive to the TSM factory that they've already got operational that they're adding on to. And, you know, the point is that this is going to just keep happening. Of course, they want our support in case China shows up at the doorstep. They want the U.S. They're going to be, that's an easy deal, right? That's not even challenging. But my point is that we're going to see a lot of rhetoric around here. So I'll get into probably some more, I guess, color as far as what's going on. But let's go ahead and bring up some charts and get into the charts tonight. And I'm interested to see what our markets are going to look like. I do have to make a comment since I had this chart up getting ready. Remember how everybody was talking about interest rates going down? All of a sudden, I told you, be careful. I brought up ZN last night to tell you that don't be the guy that buys the top. When I was talking last night, was the top. And this thing reversed, and all of a sudden yields are right back into what we're looking at, 415, just like that. And there's not going to be a big decline in yields, and in fact, it's the opposite. So let's start with ES and let's go through some of these charts. So this was the big spike, and I brought up, I've got the WaveTech indicators here, and I'm going to bring up a couple things that I think will be helpful for you to understand where we are. So this big spike down that we got, we went just below, almost right into the fib targets. And let me just see if I can bring up a couple things here. So this was a chart I meant to put out there. This chart right here was the target chart. It ended up that it was vertically straight down. This was not the configuration, but the targets were 51.12, 48.36. We hit 48.32 last night. Okay, so if we come over here and we can see the low overnight was 48.32, and we were basically it had happened just before I came live yesterday, and this big rally. We look at the range that we had. We had a range from 48.32 to 52.86. That's a monster range. Typically, when you see moves like this, I'm going to tell you that was probably the spike low. So that was the low of this pattern. But we still have the issue. I'm just looking over here at the other screen. There's like no liquidity in the futures markets whatsoever. And that's why we're seeing these massive swings. It didn't take a lot to move it around, because very aggressive buyers or sellers yesterday were moving the markets. There were some monster moves intraday. And so what we're looking at is a couple things here. I just want to get this scaled so we can see when you get this type of vertical move. So you have probably an ABC pattern from an Elliott viewpoint. Now we're going to get some corrective pattern. You can see the red dot indicator, which is forecasting where the close are going to move up in toward this 21-day moving average. This 10-period moving average is going to be the rejection point. So what we should get, whether it's the next day or so, we should get a rejection off of that number. We do have CPI, PPI coming out. I don't think those numbers even matter right now. Maybe I'm wrong, but I don't see this as an issue right now. Let me just draw in a couple of things here. So these patterns that are unfolding, you can see this orange line is the extreme levels. What I would expect to see is that these levels, we'll see a contraction of volatility. So we'll start to see this range volatility, yesterday being the biggest range that we've seen throughout this decline, but the previous day on Friday was huge as well. So when you get this volatility expansion, then we're going to get a contraction in here, and that will get us to trade in this range right here where I just put this circle. So we're going to end up trading in this downward slope on the 21-day moving average. This is going to be, let me clean this up. This is going to be where basically your trading wedge is going to be like right in here. So we're going to spend a lot of time inside of this triangle, and then somewhere over here by the end of the month, maybe as we come into early May, we'll see a breakout, and then we still have all this. This is downward momentum that is going to exert itself. And so this is all going to be the consolidation phase. We're starting to set things up. I still don't think it's okay just yet to go jumping into markets. What's good is the database is updating right now, and so when I get done with this, I'll go to the database right after the S&P, and we can talk about what's going on there. But this is completely this is the range that we're likely to stay in. And so I have to get off of here to be able to get back to this. So we're looking at range-wise, we're going to call it 54, 50, 55 even, and the extreme could be way down here at this 4,900. So we're going to see random movement trading. So, buy low, sell high. You may be able to trade this from a swing standpoint, but it could get very hairy. We're still subject to news, other events that could send this thing down. But I think as I bring up the indicators, I want you to notice that all of these grayed out areas here are the projection by the machine learning. What it's telling us is that the downward momentum on the 21-day moving average is going to stay pretty constant, but we're going to see the short-term database or the short-term momentum start to dissipate, which will give us at least a chance to move up towards this declining 10-day moving average. And on the downside, we're going to have to use probably S1, S2 on the downside. I'm going to look and see if I have something set up here. I do. So I will. I'll bring this over on screen for you. So I haven't run the sheets yet for tonight, but let's run them. So let's grab. This is the daily data off of here. Like I said, I'm working on the release of this. So I'm just going to come up here and do an Alt-C, coming back over, and I'm going to run the data sheet for tonight. The command in Claude is just update using this data. You can let me get out of the way here. So you can see that bear with me a second, I got an issue with the view over here. Okay, yeah, so you can see this was the Bitcoin sheet from last night. So what all I have to do here is hit this up arrow, and we're going to generate this sheet. So you'll see the data come up. This is all the data from the indicators. So basically, I've trained the script how to interpret and come up with all the values, and it's looking at greater than all kind. There's a bunch of logic in here that is calculating right now. So let's go back to the chart while that's running. But these forecasts here is what we're doing is seeing the momentum actually it's projected to go to trend level. I think this will flatten out once we get through this second derivative, but that pattern that I discussed will be the likely one to unfold. So let's go ahead and just kind of roll through today, and let's get through, let's go to take a look at the NASDAQ. It's a 100 futures, same forecast, same thing happening here with PPM2 is saying that the momentum on the downside is going to remain solid from the standpoint of momentum starting to dissipate, but on the 21, it's saying that it's going to be consistent. So that this is going to be your main trend line, which I call not just this is going to be the supply line. Otherwise, this is where the rejection points are going to happen as you trade through these particular scenarios here. So short-term momentum starting to bleed off, downward pressure bleeding off, setting up that triangle trading. Same thing here in the NASDAQ, and we're just going to see that continuation here. We'll just keep flying through stuff tonight. Maybe we'll even get done earlier. This is the RTY. We've got a potential V bottom here. We're going to test this 10-period moving average Right now, that number is, let me just get to that number, 1966. So we're going to move up toward the 1925, the 1950 level. Then we'll get some resistance. The PPMs are not as negative here, so we might see a little relief here from the standpoint of what's going on with these. So what I want to spend some time with tonight is we're going to go to the, let's do this. Let's flop over here real quick. Let me get to the, back to the screen here. So just making sure I get the right one. Yeah, so we still got some pretty strong momentum to the downside. And 1 second here. Yeah, so this is the stats for today. We still have, it's interesting going through this high volatility. So we still have this is a summary of everything that's coming out of the wave tech indicators, telling us what's going on. We won't do it tonight, but I will show you going forward is that you'll be able to take this sheet, the image of this sheet, put it into chat or into Claude and tell it to set up some trades. You can do day trades. You can do a whole lot of stuff. I'm finishing off the scripts on that for this release, so it's pretty good. So what we're seeing here is PPM still in trend mode down, big time trend. Let's see what the probabilities are. 60%, 51.93. We'll bring up the charts here in a minute. On the downside, 50.42 is the range with 49.57 and 52.78 as the next level. So this market grid is giving you the percent probabilities of what's likely to come out there. So let's move on. I think this is interesting. I will also bring up, we're going to look at the yield curve. There's going to be a little blip there, I believe, that we'll be able to see. But what we're looking at is the forecast is for interest rates to come right back into that 430, 395 level and stabilize there. I saw some guy, this always happens when you get a big down day when the markets were screaming down, and some poor guy comes on to CNBC and he's going to make the big call, and interest rates are, we're going to go down to 320 on the 10 and we're going to be 2 something on the Fed funds. And as I've been telling you, do not expect the Fed to show up to do anything in this scenario. They're not coming. Number one, Paul hates Trump. He's not coming to save him, and there's nothing to save here. There is no economic collapse. All we're seeing is the market's imploding. I think I did, might have been on a tweet or something, but there has been in the last, I think, 90 years, 60 times we've had I think greater than 15% decline, even in up years. So, the fact that what's going on here, this actually brings up something I did want to discuss, is it seems different to me. I've been around these markets a long time. I spent time on decade on trading floors where you're immersed amongst other players that are trading. And I've never seen emotional instability, I guess we'll call it, I've never seen so much emotion around the markets and screaming. It seems to be, I don't know, I'm not trying to offend any millennials, but they seem to get hysterical just about anything. We had a 22.6% drop on Black Monday in 1987. I was there and trading, and I can tell you, there we were shaken by that, but there wasn't all the whining and stuff going on. And I think this emotion shows up in the markets right now, and we have just a different class of traders and mentality out there. I have seen a change myself in how markets tend to respond now versus the old days. The emotional levels are much higher, volatility levels are much higher, but when you're looking at indices that are in the 5,000, you have to remember I was trading the S&P. Actually, we traded the OEX, and the index was at 100. So you didn't get that monster volatility that you get now when you're at 5,000, and the point moves and the swings are enormous because of where we are from a numeric standpoint. But same scenario here on everything. We are seeing the maintenance of, if you see my cursor here, this is telling us the downward angle of attack on the 21-day moving average is remaining solid. We're seeing a little dissipation on the upper average. All this is telling us is that we're going to end up trading within these moving averages again. So the rebound, there'll probably be a move back down. We crossed over the market grid, so we probably go sideways for a couple of days. But basically, I think everything's going to stabilize, and that's my message tonight. Is really we're looking at the pattern stabilizing here. So let's see if I can bring up. I'll just come up on screen while I'm setting this up. Just give me a second, and I want to go back and show you where we were going back in. Okay. So this is these folks have put a lot of ads on to get paid. It's a decent little site. I think if you pay in their Patreon, all the ads go away. But this red line was where we were back in December 29th, 2023. So this is all of 24 coming down. And then if we look here at this current, this year, you can see pretty much a flat line. We've got this little dip here where it should be. This is fairly stable. I still think we're going to see 2 drops in interest rates, not because of markets, because of the economy, but because this is where the Fed is trying to get to a steepening yield curve. They would like to see 3.25, 3.5 yields on the front end, 4.25 to maybe 4.75 on the back end of the curve. Nice little slope up, and that's going to be, at that point when we get there, you're going to be able to look at the Russell and finally start to buy it, but we're not there at this moment. So just going back to this Treasury chart, let's go to a weekly chart. You'll see even more contrast. This was last week, this big move down. There's still going to be, all of the indicators are starting to stabilize. We're just going to end up in this range. So this little spike is more or less the extreme of this pattern. Let me just move this around so you can see that. So all we've been doing, if you go back to 2024, we've been waffling back and forth in this big broad range, and this is on the 10-year, and this is on the 10-year, and I don't expect to see any major movement up or down out of this pattern. I think we just stay stable here. All right, so let's do a couple markets we don't normally get a chance to look at. We touched on crude oil the other night. Crude is also looking like it. All of these markets got out of whack because of what? The market sentiment that there's a recession, the end of the world's coming, all this emotional input. The S&P, all the equity markets go down, and this is it, okay? And it's not it. It's really just an adjustment, and now we're seeing the stabilization. Everything all of a sudden is stabilizing. So if you're still locked into, okay, this is a rally, we may be a rally if there's some news something we don't know about, but I think all the news is in the market for the moment. All the algos are suggesting that we're going to see stability to recovering from here. Well, I still think ultimately, after a recovery period, that we are still going to go much lower in the markets, but we're going to have to recover a little bit. So let's go over, and I'm going to go over to the database, and I just want to, this should be done running now. Yeah, so we're down to 12% now. This is the number I told you folks last night we're probably heading for. Let me just put this up here. So we got basically another 1,000 and change sells coming in, only about 100 buy signals coming in. So big negative ratios. And now the short-term database is down to 12.43. I suspect the intermediate will continue to go down as well. So there's no structure. I talked a lot last night about the structure of the market, and there's no structure here to try to buy. It's going to take weeks, possibly months, to repair this. If we hold these prices, we may see a consolidation into that wedge I talked about earlier and a resumption and downside. There's absolutely no breath in this market. Not only is there no liquidity, there's no breath at the moment. So there's no reason to panic, think you're going to buy cheap prices that are going to end up yielding some kind of great profit. There's going to be, I'd said this phrase last night, there's going to be some great trades. There's no investments at the moment. There's trades. So we're going to see, you could call yesterday's activity in the S&P was a great trade. We had a 6-7% move. It normally would take you maybe weeks and maybe months to get a 7% trade out of the index. You got it in a few hours today. So let me look at some comments here. Yeah, let's do a U.S. dollar thing too. We haven't done that. Sorry about that. Stuart, stop texting me. Anyway, all right, man. So let's take a look at stuff. Bear with me a second. Yeah, I'm just looking at a comment here, just real quick. Yeah, so Asian message. Yeah, so yeah, there's no structure in this market. It's straight down. Years ago, chart. I always joke that the folks that were trading on that chart that you're looking at are even dead or don't trade anymore. Too much. There's very little value of a data point that was generated years ago, my opinion. Okay, they're all new. You have to look at the current structure of the market. And right now, with our database at 12%, there's nothing there to grab onto. From an index standpoint and from an individual stock, it takes a while to get structured. So maybe I need to do a video on just explaining what structure is. Okay, so let's go back to this. Let's do gold. I've not done, gold is getting quite a bit of volatility. It's definitely rolling over here. I think it's testing some of these key levels that I talked about the other night. And we're looking at right on support. We should hold right in here around that 3,000 level was the number that I was looking at. We should hold in that level. But basically, we're getting a channel starting to form. The probably key levels that we're going to look at is going to be around 28.50, maybe 28.70 on the downside. But we're going to go sideways along this 10-period moving average. But these upper ranges that are being projected here aren't likely to get into play anytime soon. Let's take a look at the daily, see what that looks like. So yeah, we got down to that 40-period moving average. We've got a little wedge here. What I would be looking for on a higher close today or in the next couple of days is for the market grid to turn up, and then we're just going to trade in this wedge. Everything needs to, once you get a break and you go through all the moving averages, then you have to realign. These are just in context of my work. Yeah, maybe you should, Asian. That's what you should do. But there is no refund. Sorry. Anyway. So always have somebody so genius that doesn't have their own channel. Hey, Bo, mute that guy, would you? Thanks. Anyway. Let's go on and let's go to Bitcoin, because this is probably not funny because a lot of folks have money involved in this, but there was a lot of rhetoric going around the weekend that there was no downside. Yeah, the Smurf, there's some Smurfs around. Tony and Bo's around, so. Go away, buddy. We don't want to hear from you anymore. Anyway, you're obviously, anyway, I don't want to get into that. It's too funny. All right, so on Bitcoin, one of the levels that I talked about, we got very close to, and let me just bring up this number. That's 71,000. Let me go to the weekly. So this weekly number, this green dots here, right in the middle, that is your pivot. And on the upside, it was there. When we pivoted through it, we got the big move up to the upside. And then we're sitting here right now. If we go back through this, then we're probably going to head down to that 50,000 level. And, you know, this whole level, I talked about this last night, I believe, is really kind of a distribution from that pattern, and we're just not, it's going to be very difficult to get through that level. And it was interesting because I think it was on the comments on the channel last night, somebody was saying, well, you know, it was the ETF rhetoric that got it to 100, and it was, but now you've got all the market makers in here, and they have brought their influence into the market. And when the market gets there, there's going to be so much supply. It's going to be very, very difficult to supply from the ETFs and the synthetics and the digital side of things. Yeah, so somebody's asking a good question by Pivot. This is, I talked about this last night. When these patterns continue to extend out, they're a number, if you go through it and momentum is accelerating, let me bring this up. You can see momentum is accelerating. If we were to go through it right now, this would tell us that we're likely going down to the 200-week moving average, which right now is 40-something. Let me bring that up. 45,804. So that would be pretty devastating, especially to Michael Saylor. Yeah, and it's really, this is always an interesting market because in real terms, nobody knows anything, right? Not me, not anyone. From the standpoint, we know all the theories behind things, but if we were operating on the theories, we should have never come down to where we are now. We should be well on our way to 200,000 because everybody told us, even Tom Lee told us that, right? So, but it's got to go down before it can go up. But these market makers and these ETFs and option folks, that's going to create a lot of supply and resistance when we get back up again, because these guys have got unlimited money compared to the people that are trading on a regular basis. And, that's been Michael Saylor's deal. Just keep, buying and buying and buying. And, not even, nobody's bigger than the market from that standpoint. But the market makers, having been one, we're seeing some of these events really starting to influence how prices are moving and how they get knocked down right away when they rally anymore. And we've been seeing that pattern going back all the way, into earlier this year, right after we printed that, what was it, 110 price here? Let me just bring that up. Yeah, 109,350. Once that was printed, it's just been all down since then. And a lot of that's just been arbitrage and other things that are going on. I'm just looking at some comments here. Yeah, thanks, Bo. Appreciate that. Yeah, so JNC said he just joined. Yeah, that's pretty much what we're looking at here is, let me go back to the ES screen here. We should consolidate. We almost hit the 200-week moving average. Everything's kind of at an extreme right now, so some stabilization. And I've been warning you folks, it's going to be, at some stage, Trump and Lucknick and all these guys, Bressett, they've got these big capital investments in their pocket, and they're going to pull those out at a very appropriate time when everybody's flat-footed, thinking that maybe we haven't seen that yet, but there's going to be a lot of rhetoric that comes out around this. I'm just looking at some comments here. Yeah, just look at Green Capital. Yeah, so all that you're seeing in the indicators, when they look like they're going up, doesn't mean the market's going to go up. It just tells you momentum is stalling. And once you get over the second derivative, then that tells you that this first ppm is tracking the 10-day moving average. So when you get above that second derivative, that tells you that you can penetrate through the 10-day moving average. So these things stair step. That's why I was talking about earlier that the momentum on the ppm, this is a weekly chart now, the momentum on ppm 2 and 3 are maintaining this downward slope, which tells you which way the larger trend is. So right now, if everything goes wonderful and this projection's right, it won't be until June until we're ready to penetrate up above that 10-period moving average. Now it's declining every week, and right now that number is 57.15. Let me just get a number for you. It's going down about 100 per week. So that as we go through the weeks, all of a sudden the 57 it'll get down to, you know, closer to this 5,000, 5,200 level, and that's where the penetration, and depending on the setup at that time, you'll be able to determine whether the ppm2 is ready to where you're going to rally up to toward the 21-day moving average. So let me draw something in here just to complete this answer. So we're probably going to get a bounce off of this line here that I just drew in. Make this a little thicker. So this 10-period moving average will come here. We'll get a move off of this low up into that at some point. We'll get a rejection. We probably set up a right shoulder if it's going to hold, or we retest this low at that time. That's when we'll know whether we've got a low here or not. Right now, and when I was talking about structure a little bit ago, we need this structure to be able to see, like even here, I'm just drawing over on the right-hand side, we got this spike down, and then it's kind of this right, you get this stair-stepping, you know, higher highs, higher lows kind of pattern. But if you look at what's going on here, the indicators are suggesting that we're going to see a move up to test the 10-period moving average. That's what this is telling us. So it also tells us, let me just back out a couple of things here. It also tells us when you see this type of formation on the indicators, we're running toward this second derivative. Once we penetrate over here, and if these values are going to change and update, but as that's going to be over here somewhere, and it's going to be closer to around the 5,100 level. Thanks, Abbey Road. Wow. Still think you ought to buy some products. I hate you doing that. Thank you, though. But the pattern that we're seeing here is this is what I'm talking about, where we're going to test this level. This indicator down here is pretty flat-lined, okay? I'm just drawing over it. So there's no upward acceleration. Same thing here. We got a downslope, and we got another downslope here from the standpoint of the trends and the momentum that's going on. And so just know that there is a lot of downward pressure. So all of this stuff, we could just continue to see this market move. And now I'm going to clean this up, and I'll draw in another line. So what could happen is we get a little move like this and then another leg down. And I actually tend to think that ultimately will be what we see. However, we'll wait and see exactly what goes on from that standpoint. All right, folks, we're right at an hour. So I'm going to try to cap this off. Second, I've got an issue going here. Come up, we'll do a little bit of a summary. Okay. All right, my screen froze up. Everything froze on me. Sorry about that. Anyway, folks, thanks so much for hanging out with me again tonight. Yeah, so let's summarize what I think is going to happen. We probably saw an exhaustive low overnight, starting with Sunday night's action being down 4.5+%. I think the NASDAQ was over 5. And then we get a rally into positive tone. I'm looking here. We're up now at 130 on the session at 51.62. So we're looking at almost a 7% recovery off of the low. That's enough to set a low in the markets for right now. We're talking equity markets. Then what we should see is this rally back, test some of these levels I was talking about, look for a test of 10, maybe 21-day moving average over the next, we'll call it 5 to 8 sessions. And then at that point, we'll see what the setup is, and we'll be able to determine whether or not we're going to see new lows in this pattern or not. So yeah, so that's a great question. Who's selling at such low levels? Yeah, there's always somebody selling. Just looking at a couple of comments here. All right. Thank you, everyone. Yeah, so just know that I would say we've established a low, and what we're looking at is over the next 3 to 5 sessions, we'll get some confirmation whether it will extend beyond that, or we're going to retest the lows that we printed last night. I think that was pretty extreme, and hopefully we'll see liquidity come back. I'm still looking at, very small numbers on the screen as far as bid-ask numbers. Yeah, I do think Tanner's talking about I've been projecting for last couple of months that I think we'll end up with some kind of negative numbers in the economy coming into Q3 and 4. It could extend into 26. Will they be big? I don't know. And I've stressed this before as one of the biggest concerns that I have is that through all this stuff that's going on, something breaks. And if that happens, then we could see even a bigger meltdown. But that was my point of last night, showing you all of these declines that we've had in the past and their durations and all that. So this stuff happens all the time. I think the markets were just looking for an excuse to be able to start some kind of correction, take some money out, and then reposition. So yeah, I don't know. Somebody's asking about real estate prices. I'm not sure. They seem so resilient. There doesn't seem to be anything going on if they're not putting new supply in. So maybe the sales market could still get bad and prices not decline that much. I know there's probably 1 million real estate videos out there telling you that they're going to decline. They may, but I don't see it at the moment. Yeah, so JNC, I'm going to be going through a lot of this will be able to be detected through our WaveTech database. We follow literally 15,000 symbols, and we start to see some traction coming back in. Right now, we're still seeing liquidation. It probably is going to go lower even. We'll see. It'll be interesting. Matter of fact, just as I look over the screen, we were up 130. We just dropped from 5170. We just dropped 40 handles out of nowhere. Just while we were talking. So in the last 4 minutes, we went from basically 51.70 to 51.32. So that's a big drop, just like that. So this is a reason why you have to be very careful trading in here. There's no liquidity, and there's going to be air pockets everywhere. I'm just reading some comments here as we close down. Yeah. Yeah, like I said, there's going to be a lot of noise around these tariffs. I mean, China needs our money, so it's all going to work out in the end. We're down to 27 now, so we've dropped 50 handles. So we were up 1.3, now up 0.6. And probably as soon as they stop talking, we'll bounce back 30 handles. So like I said, though, these are the kind of air pockets you can get in trouble trying to do that. Yeah, bond direction back stable. Back in 10-year 425, 395 range. That little blip that we had down last week was in reaction. I love it. Yeah, Chi-Town Tony. Yeah, when you get anything extreme, so he's asking a question about whether the wave tech indicators are useful in this kind of volatility. I think they are, but I don't. That's why I keep talking about structure. We need more of the movement. We need to cross over first and second derivative. We need to see all that and see what the other larger trends are doing, because the weekly trends are going to come into play. And this is an old line of mine, is that they will be dominant in this pattern as we go forward, and probably all the way into June. I think into Q3, we're going to see continued pressure. There's going to be, like I said, there's good trades. There's no good investments yet. So, all right, folks, we'll call it quits. A little bit over 105. So thanks for hanging out, and I'll be back tomorrow. We're going to do it again. All right, so we'll see you then. Have a great one. I'm still trying to get over Duke losing. The refs cooked the books again. Thanks again, everyone.